So this is we are looking at uh, uh, advanced level CPA. The topic that we're looking today is loan amortization schedule. Loan amortization schedule, where we're going to have an item, uh, a company giving you a loan, and you're told to find out how the repayment of the loan will be. So we have a question here which says that this is under the under the subject of business data analytics. The question reads: a company negotiates for 30 million loan for 3 years from a financial institution. The interest rate is 14% per annum and on the outstanding balance of the loan. The principal and interest will be repaid in monthly installment. So you are required to prepare a loan amortization schedule, 5 marks, and also to determine the amount of interest payable at the end of the third year. Payable at the end of the third year. Now, in such a question, we need to analyze some of the few things. First of all, we need to get our facts right before we start the question. So we start with how many years do they want? They want 3 years. 3 years. And then the number of periods. Remember, here we want to use a formula, and in business data analytics, we focus on the formula more than indicating what is there, because that is what the examiner will be looking to check if you know the formula. The formula that we'll be using for today is called PMT. PMT. That's the formula that we're going to use. So the number of periods for this item is, we have told that the loan is repaid on a monthly basis. That means in 1 year is going to pay how many times? 12 times. So if it is 3 years, you're going to say if 1 year is 12 times, then 3 years will be how many? We multiply it by the number of years up there. Let's say, for example, this loan was to be paid semi-annually. If the loan was to be paid semi-annually, it means then the amount of the number of times it was to be paid per year is not 12 but 2. It was 2. So it means then the number of periods will be 6, because Ghana is going to pay 6 times. But basically from our question is, it means per year is going to pay 12 times. 12 times. So we ask ourselves then, what is the interest? We're told that the interest per annum is 14%. And then the question is telling that we are going to be paying this thing once after every month. So now we ask ourselves, what is the interest during based on the repayment period? The repayment period, then the interest will be 0.14, because 14% is 0.14 divided by 12, because the 12 is the number of times that he's paying per year. If he was paying semi-annually, it would be 14% divided by 2, because that interest will occur after every 6 months. So we are going to divide it by 2. Then the principal amount, or rather some we may also decide to the present value. It is also the PV, the present value of the amount that you're talking about, or rather the principal. The principal is 30 million. The principal is 30 million. So what amount am I supposed to be paying every month? What amount am I supposed to be paying every month? The amount I'm supposed to be paying, this way we use the formula, say is equals to PMT, is equals to PMT, is equals to PMT. The interest rate, it will ask us about the rate. The interest rate is 1.7. Then you have the comma, and then it will ask you what is the number of period, NPR. This is the number of period. The NPR is this one. Click on where the NPR is, which is C10. Then it will ask you what is the present value. What is the present value, which is 30 million. Now, after that, we have the future value that you want. We also have the type. We're going to talk about where to use those ones in other situations. But for now, for this kind of question, it doesn't require all that. There are some questions which will tell you that he wants that by the end of the period, this is the amount that he's supposed to pay. So we have to work back from the future value to the present value. But this question has given us the present value, so we need to get the amount that he's going to pay, because this amount is payable for that. So you can see that the amount he's supposed to pay is 1 million. It has a negative figure because the computer automatically detects that this is a payment. It automatically sees that this is a payment. So for me to make it positive, what do? I just put a negative in front of the PMT, and the amount will become positive. So we ask ourselves then, if that is the amount then that is supposed to be paid every month. So we need now to form a table to describe what we're saying. We can have the period. We can have the period here, the period, and then here we can have the opening balance, opening balance. Here we can have the interest, 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 and what is our interest? I hope you know that the interest is 14, but as we speak, the interest is now monthly. So we're going to look at how to handle it. The interest. Then we have the next one, which is the amount payable, or rather the amount paid. Yes, that is the amount that is the interest is to be repaid in monthly installment. Then we have the closing balance, or balance at the end of the period. So the periods, we are told that there are 36 periods. I can have my 1 there as the period. You realize it is bringing me it is having two decimal points. I can always remove the 2 decimal points by using this figure here. So it has that. If I wanted to do it up to 36, I know some of us are used to scrolling this down like this. Okay, it is always a tedious moment. You can scroll that down and you can get the fill series, and it can give you up to the, but it is a little bit tedious. So what do? I come to home. I say fill series. I want it in columns, and I say I want it up to 36. So automatically it will give me up to number 36. And because I also want this thing in a table, I'll put the cursor on the first cell, and then press Control T. Control T. It will highlight, and it will tell me my table has headers. Yes. So it has now brought me this amount, this table. It now looks more beautiful than what we have. We know our opening balance of the loan is this amount. We know the opening balance of the loan is that amount. If the opening balance of the loan is that amount, and what about the interest? The interest, because it is monthly, the interest is this multiply. We are told that it is going to incur times that, okay? It will give you automatically that is the opening balance. But for the purposes of you checking, I can even use times. This is called what? B16 times B16. It will still not B16. It will give me the same thing. That is what I have there. Then I have the amount. I have the amount payable. The amount payable is this one here. You realize I'm not having the figures by themselves. I am simply using formulas to insert the figures. And the closing balance. Now we'll ask ourselves, what is the closing balance? So I'll do something here for you to understand it. If this is my A, and this is my B, and this is my B, this is my C, and this is my D. This is my D. My A, I already know, is the opening balance. What about my B? My B is my A. My B is my A times the interest per month. Interest per period. The interest per period. That is my B. That is my B here. Okay, let me wrap it up so that you can see it. That is my B. I'm using the interest per month here, multiply by the opening balance. My A times interest per month. Then what is my C? My C is now C13 is equals to C13. We had already calculated the C. My C is C13, and my D now will be A plus B minus C, because this is the amount that was opening. It has incurred interest of 350,000. It means then the total amount that is supposed to be there is, we are supposed to pay 30,350,000. But how much did we pay? We paid 1 million. So I'll say is equals to this plus this minus that. Okay. So I'll also have that. It doesn't have the commas. I'll have that in commas so that it can appear more nice. So from that, then I'll ask if this is the closing balance. You always know the closing balance is always equals to the opening balance. So it's equals to, so my opening balance is equals to the closing balance of the previous year. Now you realize I don't need to be repeating this formula altogether all again. So if I come here and say, and I double click, it will give me some values, because the moment you double click, let me go back. The moment you double click, it means it is going to copy. If I do this, it is supposed to copy the formula to the other side. But you realize it is not bringing what we want it to bring. It is bringing some other things. And this is where anchoring comes in. From the previous class, we said what? Anchoring is where you want the formula to, you want it to pick from the same formula here. We don't want to move this, but we want to move our A. We don't want to move our percentage, but we want to move our A. So our percentage here will be C11, which is, we have to anchor it. We'll have to anchor it. I have anchored my interest. By anchoring, you put $sign in front of C, and also a $sign in front of 11. So that is anchoring. So right now, if I double click, it is going to, you realize now the C11 is not shifting, but the B17 is shifting to B18 because I've already anchored. Also this one, if I double click on it, the same problem. It is giving me things which are not making sense to me. So I need to anchor. The first item. So I'll put a $sign there and another $sign on that, so that now if I come and double click it, it will be picking from the same cell. It is now picking from the same cell. I think you can see here, even if I'm moving, this amount is not shifting. Okay, it is the same C13. It is the same C13. So the closing balance also, the formula is the same. So once I click here, you realize that I just need now to autofill the two columns, and there I have my table, and on the last the amount is 0. On the last the amount is 0. So preparing that table is 5 marks. Determining the amount of interest payable at the end of the third year is the interest payable is 11,324.22. That will give you 1 mark. So if the question was, we can take a break, then we look at if the question was in financial reporting, because these are financial management questions and business data analytics. If the question was under financial reporting, the question will be different. The question will ask for the journal entries. The question will ask for what is going to show the balances, show the entries that will be there in the profit or loss, statement of profit or loss, and also show the entries that will be there in the statement of financial position. So you can take a small break as you check on those items.